1 in 3 Americans said they were investing today. But when asked the same question 10 years ago, only 1 in 5 Americans said they were investing. So over the course of 10 years, 66% more Americans have started investing. That's pretty crazy. And if this trend continues, in less than 10 years, 75% of Americans will be invested in the stock market. That's almost 3/4 of all Americans. Is it hard to invest? Well, if 66 more Americans could do it over the last decade, then you can too. Today, we're going to talk about how easy it really is to start investing, and we're going to look at some real numbers from real people who started investing from scratch. Let's get into it. Okay, so let's imagine you decide to start investing today. You've been watching all these videos. You're really excited, but maybe you don't know where to start. Maybe you think you need 100 grand sitting in your bank account in order to start investing. If that was true, then everyone would be investing. Well, that's definitely not the case. So let's explore a few different options for you to start investing today. Starting with option No. 1, which is the app. When most people hear this, they might automatically assume Robinhood, Webull, those type of apps. However, there's actually a lot more to choose from. For example, you've got Acorns, Moomoo, Stash, Public, SoFi, Best, Robinhood. The list goes on and on. Now each of these apps has their own pros and cons. Some charge fees, some don't. Some have more features. Some don't. However, no matter which of these apps you pick, you can sign up and start investing with literally $0. So let's say you only have $5 sitting in your bank account. You can go ahead and download any of these apps, sign up for an account, and invest that full $5 into the stock market. So again, no matter which of these apps you pick, you're going to be able to get started with very little money. Now, if you're interested in learning more about some of these apps, I did make a comparison video recently, breaking down all their features. I'll link that below if you want to check it out. But moving on to option No. 2, which is ETF. An ETF is essentially a basket of securities that trades on the stock market as a single unit. So within this one ETF, you might have 50, 100, 1,000 different stocks or other securities all bundled together. This means when you buy one share of this ETF, what you're really buying is a tiny piece of all the stocks inside this ETF. This also makes ETFs a very diverse way to invest because by buying one ETF, you're instantly invested across hundreds or even thousands of different companies. But the best thing about ETFs is that most ETFs have very low minimum investment requirements. In fact, many ETFs can be bought and sold throughout the day through most brokerages like Vanguard, Charles Schwab, Fidelity, and they cost a fraction of a penny. This means you could technically invest as much or as little as you want in an ETF. So for example, let's say you wanted to invest in the S&P 500. Instead of buying individual stocks from all 500 companies in the index, you could just buy one share of an S&P 500 ETF and get instant exposure to the entire index. If the S&P 500 ETF is trading at $400 per share, then you can buy 1/400th of a share for $1. So in this example, you could invest as little as $1 in the S&P 500. But what if you wanted to diversify your portfolio even further? Well, that brings us to our third option, which is robo-advisor. These are online investment platforms that use algorithms to create and maintain a diversified investment portfolio for their clients. So here's how it works. You'd first sign up for an account and answer some questions about your financial goals, risk tolerance, and time horizon. Then the robo-advisor will build you a diversified portfolio of ETFs based on your answers. After that, the robo-advisor will automatically rebalance your portfolio on a regular basis to keep it in line with your goals. The great thing about robo-advisors is that they make investing super easy. You don't have to worry about picking individual stocks or even individual ETFs. They'll do all the work for you. And because robo-advisors invest in ETFs, they have extremely low minimum investment requirements. In fact, some robo-advisors allow you to open an account and start investing with $0. Once again, if you wanted to learn more about robo-advisors, I did make a comparison video of some of the top robo-advisors. I'll link that below if you're interested. So between these three options, apps, ETFs, and robo-advisors, you can get started investing with as little as a few dollars. Okay, so let's bring things back to reality. How realistic is it for someone to actually make money investing? To answer this question, let's look at someone named Kate. Kate is a 30-year-old woman who decided to start investing for the first time. She didn't know much about investing. She didn't have a lot of extra money, but she knew she wanted to save up for a house in the next 5 years. So how much money does Kate have? Well, Kate has two options. Option No. 1. She could max out her 401k contributions every year for the next 5 years. Option No. 2. She could invest outside of her 401k and contribute as much as she could afford. Well, let's look at both scenarios. In the first scenario, Kate maxes out her 401k contributions for the next 5 years. In 2022, the maximum contribution is $22,500 per year. So at the end of 5 years, Kate would have saved up a total of $112,500. Not bad. But what if Kate invested outside of her 401k? In this scenario, we'll assume she still invests $22,500 every year. However, instead of putting that money into her 401k, she puts that money into a diversified low-fee ETF like VU. Then, she checks on her investment portfolio once a year to see how it's doing. After 1 year, her investment portfolio would be worth $23,750. After 2 years, her investment portfolio would be worth $49,750. After 3 years, her investment portfolio would be worth $77,500. After 4 years, her investment portfolio would be worth $107,250. And after 5 years, her investment portfolio would be worth $138,750. So in this example, Kate ends up with nearly $30,000 more by investing outside of her 401k compared to if she just maxed out her 401k contributions. The lesson here is that it doesn't take a lot of money or a lot of knowledge to start investing. All you need is a few $100s and an app or brokerage account. And if you want some help picking out the right ETFs or robo-advisor, I made a couple comparison videos. I'll link those below if you want to check it out. In the meantime, thank you guys for watching. I appreciate it. Leave me a comment below. Let me know what your experience has been like when you started investing. Was it easy? Was it difficult? Did you know a lot about investing, or did you know very little? And finally, if you haven't already, please consider checking out my free newsletter. Every Sunday, I send out a free investment newsletter covering topics like this and everything else in between. It's totally free. I promise. I won't spam you. Thank you so much for watching. I really appreciate it, and until next time, take care.